Iris. How are you this morning?
I'm well, Jill. Lovely Saturday morning. So
Yes,
here, thank
absolutely.
you. Thank you for inviting me.
Thank you, and thank you for showing up. And I am going to go ahead and get started with our presentation this morning. And hopefully people will jump on and join us pretty quick. So my name is Jill Arrington, and I am your Leaving a Legacy real estate agent. I am also a new member of the Women's Council of NARAB. And so you might want to ask, well, what is NARAB? NARAB is the National Association of Real Estate Brokers, and the Women's Council is the Associated Real Estate Property Brokers of the one in the East Bay. So this morning, one of our hosts wasn't able to make it, but today I do have a wonderful person with a lot of information for you guys this morning. Her name is Iris Chavaria. Is it Chavaria? Chavaria, Iris Chavaria. And this morning, we're going to be talking about real estate financing, home buying, the home buying process, multi-unit house hacking, and hopefully we'll be able to get to interact with some of you and find out what your real estate goals are. And so here are some of our workshop sponsors. As you can see, this is the Women's Council. So you see powerful women over on the right-hand side of your screen. We have Ms. Wabette, who is my mentor, second vice president. We have Tammy Willis, who is the 2022-2023 president. And then we have Gwendolyn Brooks, who is the third vice president, and Emma Bigg, who is the treasurer. And we have Shaniqua Brown, who's the secretary, Trina Garrett, a parliamentarian who wasn't able to be here today. And then Angel Love, who is the corresponding secretary, and then Angela Finley, who is actually the chaplain of the East Bay Associated Realtors Property Brokers. And so before I go ahead and I've already introduced myself, I wanted to tell you a little bit more about NARAB and why I actually joined this organization. So this is an African-American organization. In 1947, African-American real estate salespeople and real estate brokers were not allowed to join the Real Estate Association. And so what they did in 1947 is they created their own organization. And so instead of us being called realtors, they gave African-American, created the association, and we are called realtors. So I'm also a realtor, so that means I'm a part of the California Association, but American Association, but I'm also a member of the NARAB, the National Association of Real Estate Brokers. So I have both pieces that I serve. So we have the California Association of Realtors, and then we have NARAB, which is specifically for an African-American organization. I wanted to be a part of an organization that is educating African-American people on how to create generational wealth for their families and how to just show up bigger in the community, because we are still coming in, still last as far as home ownership. Okay. So now my featured speaker, again, her name is Iris Chavaria, and she's a community loan officer with Union Bank. And I am going to go ahead and let her introduce and tell a little bit about herself.
Thanks, Jill. I have been in the lending space for over 30 years. I've seen lots of different changes. I work for Union Bank, which is a local bank. It's Pacific Northwest, and we're very interested in our community in terms of it thriving. So we have different programs that allow people to take advantage of home ownership. I've been working in lending for many, many years and have put together lots of different classes and have really helped a lot of people get their homes. And it's kind of fun to go back and see some of these folks who've owned their home for 30 years or 20 years and are passing it on to their next kids. And it's, your home is a huge wealth builder. And that's what we're here to do, is to really try to get your foot in the door so that you can also participate in that wealth building exercise. So happy to serve you.
Absolutely. Thank you so much. Okay. So today's interactive agenda is, we're going to be talking about, we're going to review the home buying process. We're going to discuss loan products of interest to first-time home buyers. And then we are going to talk about next steps. What is HUD certification? What does that course look like? Credit counseling and the pre-approval process. Okay, so first we have the buyer's consultation, the representation agreement. And first of all, can I just say, Iris, can you see me on the other side of the screen?
I can see you, but I don't see anything you're presenting, Jill. So if you have a list, or if you have anything like that, I'm not seeing that.
Okay, give me just 1 second here. Then let me just start over. That means I have not shared my screen. And so I'm so sorry. Here we go.
There we go. Something's popping up.
Okay. And there we go.
There we go.
All right, perfect. And there was one thing else that I needed to do, is I need to put my screen on the participants. And all right. Okay, so there we go. So at this point, I can only see you, Iris. I can't see me sharing it. So that's fine. We'll just keep it moving like that. And so let me just back up to where I was so I can show people the agenda. And so again, you know, this is my first time doing this particular workshop. And so it's a learning process for me. And so I'm really excited again to be here today. So today's interactive agenda is to review the home buying process, discuss loan products of interest to first-time home buyers, and then talk about the next steps, the HUD certification course, credit counseling, and pre-approval. Okay. And so the buyer's consultation, representation agreement. So a buyer's consultation is useful to clarify the home buying process. And this is something I would do as a real estate agent. When I get with you, the first thing we do, we decide if we interview each other and decide if we can work well with each other, and decide if we want to go forward in the home buying process together. And so a buyer's consultation is useful to help clarify the home buying process, to set the expectations on both sides, and to lay the foundation for a happy client and agent relationship. So some questions asked are, what type of home are you looking for? Your location considerations, how many bedrooms or bathrooms? Is a yard or outdoor space important to you? Are you looking for move-in ready, or are repairs or remodel okay? What is the amount of the square footage that you're looking for? And what is your price range? Have you been pre-qualified for a mortgage? That's actually my number one question. Have you been pre-qualified for a mortgage? Do you understand what it means to be pre-qualified versus pre-approval? And what are your top 5 priorities? And so these questions we ask, and we go even deeper than this, because in the home buying process is so competitive that we try to really narrow down. What I like to do is I like to get narrowed down. What are your must-haves? What are your needs? What are your wants? And then we get all of that sorted out. Here's Jill, what I absolutely must have in a home. Here's Jill, that if the home doesn't have it, I'll be okay to move forward with the purchase. I find out everything that it is that you're looking for, and then we narrow down from there. And I'm a person who works from energy. So I say the energy, the excitement, the more that we put out into the universe, the more we get closer to what it is we're looking for. So one of the things that I talk about in my buyer's consultation is we're going to do a lot of looking. You're not going to find that first home right away. Some people say, oh, well, I think I'll just wait until the market does this or the market does that. I say, don't wait, because this is a process. And this process can go, it can be long or it can be short, but it all depends on the market. And the longer you sit around and wait, the less experience you have in finding and bringing the energy to what it is that you're looking for. Right? So I had a client, we looked for 6 months and she never stopped. I never got tired of showing her home, and she never got tired with the family. They never got tired of looking. And that's the energy we brought. And eventually we found the area that they wanted to move in, next to the schools that they're already renting in the same area. So she didn't have to change schools or anything. And that's the energy we brought to the relationship. So that's what I try to do for my clients. Iris, is there anything that you would like to add to that, especially regarding what the difference between being pre-qualified for a mortgage and being pre-approved?
Absolutely. Jill, you hit the nail on the head. It's the whole process is about learning how to do this. But the very first question that I always have is, what's it look like financially for you? Because what your agent wants to know is, how realistic is this purchase and what is real? So when I chat with you and we kind of have a conversation on what you qualify for, I've pre-qualified you. I've basically said, yeah, it sounds like you qualify for this, but that's not good enough for someone like Jill, who's really serious about helping you find a house. Right. So we take it a step further, and we get you to apply, fill out an application. We find out what your credit score is. We find out what programs may possibly work for you, so you have options if you have options. And we try to match everything so that we can get the financial piece buttoned down, because now that you know what your purchasing power is, then it helps you be available to those houses that are in your price range and what you're looking for. And it gives you a more realistic idea of what you want to do. So your pre-approval includes me looking at your bank statements, your pay stubs, reviewing your credit to see if there's anything that needs to be cleaned up. And then we render a decision based on your information. And, we make sure that you have enough money for closing costs and you know what the payments look like. And at that point, then I can give you a pre-approval. I usually try to pre-approve you for the maximum, and then you can decide where in that price range you need to go, or if you need to have more people on your loan to help you qualify. So that's the difference between a pre-approval. Most agents, once you put in an offer, all agents actually want to know that your approval is in place, not a pre-qualification, but an approval. And, so you want to make sure that you have as much armor to be able to go in and have the best offer by having an approval that basically says, yeah, the bank's looked at me, they get how much I qualify for, here's my letter, I can do this. Because otherwise it's pie in the sky and it doesn't help anybody, and it really is not a good use of your time. If you're not ready to buy and you're not quite there, this is also a session where, I talk to you about how you can get there. What are your deficiencies? What is it that you need to do? What on your credit report needs to be fixed, if anything? What does a gift look like if you're short of funds? What does your self-employment look like? So it's a really great opportunity to sit down, talk to a banker, look him in the eye, tell him, this is what I have. And the banker tells you, this is what you qualify for, in a written formal letter that is acceptable to the realtors. So take it away.
Absolutely.
Yeah.
Yeah, that's absolutely, that's wonderful. That's great. Thank you so much for that information. And in saying that, I wanted to ask, one of the questions about how can people, Iris, what does it look like for people to be able to put other people on their loans?
It depends on what the situation is. Oftentimes, you'll get mom and dad who are buying a house and they just don't quite make enough money to qualify for that house that they need. Okay. So, the people that are most naturally available are the kids. And if the kids have jobs, then we can add their jobs into it. Or sometimes they have dependents, kids or parents who have Social Security income. We can include those if those are part of the household. Okay. And so we would be adding people that your first people that you should reach out to are the people that are living in your house. Because when we do the loan, we like it when everybody who's on the loan is going to live in the house. Okay. If they're not going to live with you, then again, we need to sit down and find out, oh, it's your brother that's qualifying for you. Oh, he already has a home. Okay. He has some debt. So we have to kind of put the two households together and see how it's going to help you. And again, this is where we go through and you're getting some valuable advice as to what's going to work. The other thing is that you want to make sure that the programs that you're getting into allow for a co-borrower. Okay. Or if you have a co-borrower, how much do you have to be able to afford before you allow a co-borrower in there? And what's it look like? And who is that co-borrower? So that's what adding an additional applicant to your entire application looks like. It's a thorough investigation. So you need to be prepared for that person to take the legal responsibility with you to be on the loan. They don't have to be on title, which means that they're helping you financially on the loan, but they're not necessarily owners of the house. So that happens a lot with kids because down the road, the kids want to buy their own house and you want to make sure that they're not on title, that they're not owners in that regard. However, co-signing for someone, you are also taking on the legal responsibility that if that person can't make the payments, you're on the line for making sure that those payments are made. And if they have a foreclosure, you have a foreclosure on your record as well. So lots of responsibility, but then it's absolutely wonderful when you can get someone to help you co-sign, and then down the road you refinance, you take them out and you're on your own and you've started with your home. So it's a consultation.
That's some awesome information, Iris. That's some great information. I have a question because it always comes down with what I'm seeing for a couple that I'm working for. So I have the they're going to be co-borrowers. They're husband and wife. The wife has the credit that qualifies, and she has a steady income, right? And the husband makes the money, but doesn't have the credit and needs to pay off things. So you were just mentioning something about a person being on the title versus, but they have to still qualify as if they were at the same level as the borrower. Is that correct? Credit and all, credit score and all.
Jill, that's a really great question. And this is where the consultation comes in. We do pull credit reports. And what we do is we take 3 credit scores, your 3 credit scores, and we take the other person, husband, 3 credit scores, wife, 3 credit scores. We pull out the highest and the lowest, and we take the middle score. Okay. And then we say, which is the lower of the 2. We're bankers, we're conservative. Okay. So if you have a 780, and most women do have better scores. And if the husband has a 680, we're going to take the 680 score, and the 680 score determines the pricing of the loan, what they can qualify for. And we basically take the least common denominator, and that person then becomes the benchmark for how we price our loan. Okay. Sometimes, and if they're on the loan, we're counting their income, we're counting their credit, we're counting their assets. Okay. But let's say the husband has a credit score that's 580, which isn't very good, and it's not going to get you to qualify. So he can't be on the loan. We can't count anything of his. Okay.
Oh, really? Okay.
So
Okay.
we are just left with the wife, and does she qualify on her own? Okay. We've had
Okay.
situations where we've, you know, one of the parties doesn't have very good credit, and it's sometimes better not to have that party on the loan. And
Mm-hmm.
hopefully that person doesn't have much income, or that income doesn't make a difference if we delete them from the loan. Okay.
Uh-huh.
Uh,
Right.
but that's the loan piece. If that
Right.
person isn't on the loan, but still has ownership in the property, you put them on title. Anyone on title actually owns the property. Anyone on the loan just is responsible for the loan. Okay.
Okay.
So if
Okay.
the husband's credit score is so bad that we can't count him, we can only count her income. We can't count his. So this is
Okay.
where I come in and I say, okay, these are the things that you may want to do so that you can get yourself prepared, so that in a month or so we get this thing going. And I give them information as to who to contact, what to do, so that you can be in a better position. Paying down credit cards is always a good thing. You know, you
Mm-hmm.
analyze it to see what's going on, and
Right.
then we can hopefully bring him back into the picture. But
Uh-huh.
again, this is the preliminary discussion.
Yes.
How can
Yes.
you get the credit score a little bit better? That might give you better pricing, possibly. Not much difference in the pricing, but some things do make a difference, and a couple $100 a month makes a difference. So we try to optimize the situation, and also review all the co-borrowers and the existing borrowers, and how do we get everybody to the table so you have as much purchasing power as possible, so that you, Jill, can then buy them the house that they really want.
Absolutely. Great response. So I just want to make a note to people that not having enough credit is not bad credit. It's just you have not built enough to get get the credit score that you need. You do not have a lot of built-in, because I know people who make a lot of money, but they have not gotten the credit cards. They have not done what they need in order to bring their credit score up. So a lot of times people may have some shame around what their credit score looks like. They don't want to talk about it. And the reality is that you may not necessarily have bad credit. You know, if you have bad credit, collections, repossessions, things that have major, and a lot of student debt. And having student debt is not a bad thing. It's what we do in order to get through life, to get to the next level in a career that we're going for. So a lot of the clients that I work with, I really work with them to understand that their credit, where they are with their credit, is not something that we shame you around. That's where we work with you to make sure that we help you find out what it is that's going on with your credit, and hopefully get you consistent and get you the help. And I've worked with someone for 7 years that I now refer all my clients to get you to where you need to be in order to get your credit either repaired, or to get that score where you need that score to be, even to get it to, like the minimum. So credit is not a bad thing. And then just know too, yes, lenders are going to get in your business, and then underwriters are going to get in your business even more. Just when you thought you've answered all the questions, now they want an explanation. So for certain things. So just, I share with my clients to always be prepared to answer lots of questions and be prepared to be an open book. And I do not shame people around where they are with their credit and in this process, because we're here to help you. And if it takes you a little bit longer than what you thought it was going to take, then so be it. Let's just make sure that we're moving forward. That's what I tell my clients. Okay. All right. So going down next to the, did you have anything else to add on that, Iris, before we
No, I
go
think
to the mortgage?
it's a good approach. Credit score is not a reflection of you as a person. It's just a number that quantifies your credit. So there are things that you can do to make a difference in your credit, and sometimes they're very doable, and people have some great surprises, like paying down some credit cards, and so it's always constant work, So
Yes.
there. Okay.
Absolutely. Thank you. Okay, well, we're going on to the mortgage payment breakdown. We're using an example of 450,000 with a purchase price of 5% down. And we're going to have Iris walk us through what this slide is about.
Sure. And just before we go through this, I just want to say interest rates have been moving around a lot. In the past couple of years during the pandemic, interest rates were held down artificially, and that's why you had rates in the threes, and that's why you had such a huge buying purchases throughout the entire United States. People could afford to buy homes. Now interest rates have gone up, and from what you see in this example, 3.38, they're closer to about 5.25 or so. And so it depends on the program, yes. Depends on the down payment. It depends on lots of different things, your credit score. So this example just kind of gives you a breakdown of the components of your housing expense, but it's not reflective of what the current rates are. So the loan amount, we always base the loan amount based on the purchase price or the appraised value of the house. So in this case, the house appraised at 450. So the loan is based on 450. 5% down is 13,500. 30 years is the typical term that people use if you want to pay your loan. If you want to pay more into your loan on a monthly basis, your loan will be over sooner. And you can also choose 15 or 20-year terms, which means 15 years it's faster, but the payment is much higher. So that's why people choose 30-year terms. 30-year means it's going to be fixed. It's not going to change. This is a 30-year fixed, and those are really good because they're just very predictable. There are other kinds of programs, but this is a really stable one. Taxes, you have your taxes and insurance collected on a monthly basis. So when you have less than 20% down, you're required to have your property taxes and your insurance collected on a monthly basis. And the reason for that, actually, when you have 10% down, you're required. Anything more than 10%, it's optional. And the reason for that is that property taxes are 1.3% of your purchase price. So on a property of 450, you're looking at about, say, $5,500 a year. And it's broken up into two annual payments. And so it's a lot of money to come up every 6 months with this, say $2,500. So what they do is they include it in your payment every month. You're forced to save for it. And then when taxes are due, they disperse it. And it's the same thing with insurance. It's about $1,000 to $2,500 to insure your property. It's a lot of money to come up with on an annual basis, but monthly, we ask you to put it in on a monthly basis, so it makes it easier for you. You don't have to if you have more than 10% down, but less than 10% down, you are required to. Property taxes is a percentage of the purchase price. And it's about 1.3 in most areas. Mortgage insurance. Mortgage insurance is there when you have less than 20% down. And what mortgage insurance is, also known as PMI, is it's an insurance company that basically says, we're going to take a risk on you because people who put less than 20% down are typically the ones that have the most foreclosures. So statistically speaking, you are a risk. So mortgage insurance is basically this mortgage company that comes and looks at your file and says, yeah, we think they're going to be good for it. And if they're not, we'll pay you, the bank, not you, the borrower, will pay you for the loan. We'll make you whole on the loan. But the borrower, if they don't make the payment, they lose their house. So mortgage insurance becomes less when your down payment is higher, and you're less of a risk if your credit score is a little bit higher. Okay, so that's the reason the credit score, you want to make sure you have that. Mortgage insurance also goes away after 2 years. You can request for it to go away, or if your house has gone up in value, so that 80% of your loan, your house is 80, your loan is 80% of whatever the value is. And that's why you need to keep in touch with Jill, because it's like, Jill, has
Right.
my house gone up in value? Has my house gone up in value? It has. Great. Let's get it appraised and let's get rid of that mortgage insurance, and that mortgage insurance goes away. And some
Yes.
loans, like an FHA, you have to refinance to get out of that PMI because it's a loan that's available for more risky transactions. But mortgage insurance can go away. And I think it's a good idea to have mortgage insurance, because otherwise, if you don't have the 20% down, it's a chance to get in, and it's a chance to start building your equity. So that's mortgage insurance. HOA dues. Most houses don't have HOA dues unless you live in a planned unit development, or if you live in a condo. And those are part of your housing expense. So this person is buying a condo, $450 is the purchase price, 5% down. The entire payment is $3,552. So what I'm going to do as a lender is I'm going to use that divided by your income, and no more than 43% of your income can be towards housing. I'm also going to look at the monthly debt that you have. So if you have that big car payment or lots of student loans, then your purchasing power is then reduced, because we don't want to see more than, say, 43 to 50% of your income going towards housing, because it becomes too much of a burden for you on paper, at least. So that's why we want to make sure we have all the co-borrowers in place. But this is how I look at you as a lender. This is what I'm evaluating, and I try to give you options on what programs may work for you. There's not just one program, there's a couple of programs. And keep in mind that depending on your situation, there might be some that are more advantageous for you. So this is the breakdown of the mortgage payment on what I'm looking for as a lender, and what you're looking for to see if that's going to be comfortable for you.
Absolutely. Thank you so much for that. I'm going to come out of the presentation before we go into the 4 things to know about closing costs. And I'm going to once again try to see if I can get over to the speaker gallery to where I can also, because I'm going to have a little bit of presentation that I'll be doing too in a moment. So I'm going to try that one more time and see if I can get it to work. If not, Iris, you are just on screen with your beautiful face the whole time. And that's a good thing. So it's not a bad thing.
So
Let me just try one more time, see if I can get it to what Wivette had asked me to do. And so this is a good time to get up and to get you some coffee and use the bathroom and call and invite some people to this workshop. Okay, so just go see. I'm just looking to see where I can share the speaker screen, and it's really strange that I don't see that. Let me get you here, bring you up. Okay, well, really strange I can't get to that screen. So I'm going to go right back in, and we're just going to keep it moving here. Okay, so coming up next, we're going to be speaking about the 4 things to know about the closing cost. So the 4 questions that we're going to cover are: what are closing costs? What do they cover? how much are they, and can they be avoided? Okay. So closing costs are fees that must be paid when the property title is transferred from the seller to the buyer. What do they cover? They cover the cost difference based on location, property, and loan type. And some of these costs include fees for the application. Also, it has to do with the appraisal. Some of the fees are appraisal, home inspection, property taxes, taxes due within 60 days of purchasing, underwriting, and more. How much are they? They're usually between 3 and 6% of the home purchase price. And can they be avoided? Sometimes, but not usually. One option is to negotiate with the seller, who may agree to pay a portion of your closing costs or prorate taxes. And that's where I come in. It's all about negotiating what it is that the seller's going to pay and what it is that the buyer's going to pay. And that's how we get some of it down. However, I just want to let you know, and I have videos when you work with me. I also send out videos to explain the process, that when you are looking at your estimated closing cost details, it will blow your mind when you see their fees. And then you go, I don't have that amount of money. And it's not, no, that's not all of you. You're not paying all of that, because we help get you in programs. Some of that is going to the seller. Some of that is buyer's cost versus seller's cost. And some of those fees, when everything is broken down, what we're basically looking at, what is it going to, what's the cash out of pocket for the borrower? That's the main number. But we want to know what those numbers are. We want to make sure everything is aligned. And that's what I always tell my clients. We look at those closing cost details before, when they come out and we sign disclosures, and then again when we get those final numbers. So Iris, do you have anything to add on this screen?
I'm sure. So when we pre-approve you, we take a look at how much money you have in the bank to make sure that you have enough money for closing costs. Because sometimes the sellers want to know that you have enough. You have to show that you have enough to cover the transaction. So there's different ways that we can price the loan so that you pay less in closing cost, and some of the loan pricing the rate can be increased so that you can get a credit towards closing if you don't have enough money. Or in some cases, we have grants. Union Bank has a grant, and we will, it's based on income. If your income is $122,000 and less, we'll give you $9,000 to purchase a home in Alameda, Contra Costa, Marin at the Bay Area. If you're out in San Joaquin, Solano, the grant is for $6,000. And it's a non-refundable grant. I mean, it truly is a grant. After 2 years, you get a W-2 for that. So those things are really helpful. And again, that's the consultation that we have, because it's not just about the down payment. It's how do you cover the rest of the closing cost? And how do we get Jill involved to help you make sure that you have enough money to cover this stuff? Because there's lots of things that need to be done. And so we want to make sure that that doesn't become an issue when you go to close.
Absolutely, absolutely. So those are the things that we actually talk about up front. So when I talk with my clients, and I let them know, we are going to be all up in your business. And so, yes, we're going to be in your business, but it's worth it. It's worth it for me to be an open book, and for me to let someone assist me through and talk about financial matters, talk about my money matters, talk about where I am, find out if I'm really good to go. And if I'm not, what I need to do and how we can work around it. It is just, it gets you to your end result. And then you wind up with a property that you love, hopefully that you love, and can live with while you're working on leaving a legacy for your family. And then once you do it, you understand how to do it over and over again. Because what we're getting ready to go into next, on the next slide, we'll be talking about is that leaving a legacy is not, purchasing one home. I tell people, some people may purchase and say, oh, this is American dream, I got that home. But that's not how you leave a legacy. For me, I'm looking to leave a legacy, leaving multiple properties for my family with cash flow assets for myself for retirement because I did not have that retirement set aside. That's my story. I don't have that retirement set aside. So my goal is to purchase enough properties and have enough income, cash flow income for me to retire and walk away from my job. So that's where it is for me. Okay. And so before we go into anything next, Iris, did you have anything on what I just said?
No, I think that that's perfect. Yeah, that's a great
Okay.
goal to have some passive income like that, or active income, actually. Yeah.
Yes. Okay. All right. So what is house hacking? And so FHA financing highlights. So again, when I talked about the goal for my first property, and I've had many properties and I've sold properties, right? But I just recently made a purchase, and my son and I, we know that multifamily is a great way to go, a great way to start, where you can have that rental income. You move into one, and then within a year to 2 years, you can move out of that rental and someone else can move in, they're paying your mortgage, and you can begin to build yourself up financially to purchase the next one. Well, guess what? I wasn't able to do that, but I do. That's one of the goals, right? That's one of the goals. So I went with a single family home in hopes that I would get this home as a turnkey Airbnb so that I would be able to sell it and get myself into and begin to get into multifamily marketings. And that is truly the goal. That's my goal. We talk about goals through it. So I set a goal, and so I figure what's the best way to get to that goal. But I'm going to let Iris, because Iris, you do FHA financing?
We do.
Absolutely.
FHA is one of the products that's available out there. And what is FHA? It's a federal housing authority that helps people buy a home. Basically, it's a program that was created so that it's very generic. Lots of people who have very little money down, 3.5% is what is required. This loan is made available to lots of different people. So you do have to pay PMI. It's a great starter loan. My parents bought with an FHA loan, and it really helped us build our wealth. There are loan limits as to what amount you can get on an FHA. And I like FHA because it allows for lower credit scores. Okay.
Mm-hmm.
Or I have a
Yes.
client right now. She's an attorney. She makes a lot of money, but she doesn't want to put that much money down. She wants to keep some of it in her pocket. So she's buying with an FHA. And in high cost areas, such as the Bay Area, they allow you to buy a home with FHA with only 3.5% down up to $978,000. So again, it's one of the products. Most of the products are 5% down. We do have a product that is available in high cost areas that is only 3% down. That's, is another option besides FHA, but FHA has some great programs. If you purchase a duplex or a triplex or a fourplex, it still allows you to get in with very little money down. And that's fantastic, because if you have an opportunity to buy a triplex, we'll use the rental income for those units that are already rented. And then we'll, count that in as part of your income. And that is really, really helpful. Duplexes are fantastic for, big families that want to live next to each other, but not with each other. We all know that one, right?
Right.
So FHA is an extremely flexible program that there's no income limit in terms of who qualifies for an FHA. If you think you make too much money for it, that's not the case. You just have to make enough money to qualify for the loan. But yeah, these are definitely good guidelines. Out in Stockton, you're looking at $420 for a house with 3.5% down. But again, if you go to the fourplexes, the triplexes, you're still looking for just very little money down. So it's a great way to get into some of these properties.
All right. Absolutely. And so, you know, like I said, that's my goal. There's lots of multifamily homes out here in Stockton. I just had one of my own challenges of finding a complex that I wanted to move into to be in one of them. So that was just like some of my challenges around looking for. But I was actually using FHA, and so I used FHA, and I believe Cal Half is what we're talking about next. I used for the single family home that I purchased in Sacramento, I did use the Cal Half down payment and closing cost assistance. And these two loans have junior loans. They're not grants. So you have a first loan, your original loan, and then you have your closing cost, which is a junior loan, and then your down payment is also a junior loan, and they are repayable. So when you go to refinance, those two loans must be paid off in a refinance. And so you say, well, Jill, why would you do that? That doesn't seem like, hey, you know, I'm ready to go, and I needed the assistance. And so the down payment and the closing cost assistance was exactly what I needed. Yes, even as a real estate agent, like I'm telling you guys, I'm moving toward wealth. I'm not wealthy yet. I'm moving towards wealth. So I use the tools that I need in order to get to where I want to go. And so these were some of the aspects that I liked about the Cal Halfa. The minimum credit score that you need for the Cal Halfa is 660. Again, I had closing cost and down payment assistance. And let's see what else. And it was a first-time home buyer's loan. And so those were the things that I needed. I was just ready to go. And so I had a great interest rate too. I had a great interest rate with the Cal Halfa loan that we locked in. So, you know, and I was at 680. So I didn't have that high score either. And again, I'm just gonna I continue to talk to people. It's about where you at. If you want to wait a year, 2 years in order to get a 700, a 720, a 800, whatever it is, that is your personal prerogative. I just had to know that I was ready to go and I needed to make that first move. Timing was right, energy was right, and that's what I talk about. So I have to look at. So let me just share with you what I did with this first property, and then I'm going to ask Iris if she has anything that she'd like to share about the Cal Halfa loan. I purchased that loan, and my son said, "Mom," he said, "I want to do Airbnb." And I said, okay, because we know traditional rent he just believed that he could get more with the Airbnb. So this was our tester. And so I said, okay, this is my son. We're business partners. And he said, okay. I said, okay, I'm going to let you go for the Airbnb. And so we got started with the Airbnb. We did all the renovations and upgrades to the house that we needed to do. And also had got a business loan. We did things like we did bath fitters. We got the showers redone. We took out the bathtubs and we put in stand-up showers, and we just got that house real nice. And I'm telling you, people loved our Airbnb. My son was a super host in less than 30 days. In 30 days, I think, because you have to go for a month, and he became a super host. I think it took him up to 90 days to get to super host. A lot of tweaking, a lot, of learning about how to get the type of clients, that Airbnb clients that we were looking for, because you want the right type of clients that's going to come in, respect your home, take care of your home. And so we had a lot of work to do, but you know what? We did it. And a year later, because of the market, because you have to know where the market is and what the market's doing, we had over $100,000 worth of equity in the home in 1 year. We had a 3-year goal before we would sell out and before we would refinance and sell, or either sell the home. And so in 1 year, the market was exactly where we needed to be. And we we went ahead and we put it on the market, and we sold this Airbnb 1 year later as a turnkey property, as an Airbnb to another Airbnb host. They didn't like the home that they had. They came in, they saw that, oh my God, this home is gorgeous. And it's a 3-bedroom, 2-bath. And we sold it for $100,000 over what I purchased it for 1 year later as a turnkey property. And so what we've learned through that, we've honed our skills. We are now, we know how to get the Airbnb together. We know how to present as a host. We know how to beautify our home. We have a theme, and people just really enjoyed that. And we did have a lot of Airbnb hosts who wanted to come, and we sold it furniture and they wanted everything. They say, do not move in. We want everything you have, furniture. So we left everything, and we sold that property, and we paid out the 2 loans, and I still had enough money in the bank to do my next deal. So, and I'm excited. So now we're in a new deal in Sacramento. We're in our next property, and we have enough space in the back to do a duplex. So we bought one, the single family home in the front, and now we're getting ready to add a duplex in the back for ADU and do Airbnb. And we got this thing rolling, man. And so that part is really excited for me. So we're working toward and that's what Cal Haffa did for me. Yeah. Got anything to add, Iris?
Yeah, no, definitely. The biggest part in buying a home is really putting together your down payment. And I say, if you can afford to make the payments on the silent seconds or whatever additional financing you get in addition to your mortgage, do it. Because if you're in it for the long run, or maybe even for the short run, it's worth it to do that. It's like your rich uncle lets you borrow some money and then you have to pay it back.
Right. Right.
You're better off with a rich uncle, having a rich uncle. And in this case, it's the state of California or the federal government that allows this, or Union Bank that says, hey, here's some additional money. So I always say, go for it. And if you can afford it, that's great. If you can't afford it, then that will be a problem. So yeah, fantastic. Good to hear.
Absolutely.
Where was your property located? Your Airbnb?
In Sacramento. We've learned Sacramento has some really nice hot spots.
Nice.
And so we're loving Sacramento right about now. So yeah.
Cool.
Okay. All right. So next, search for property and negotiate the offers. And so we talk about the seller's disclosures and the reports. The seller lists any known problems with the property on disclosure forms. Read and question items you don't understand on the transfer disclosure statement. Seller property questionnaire and the natural hazard report. Pest inspection and completion and other documents such as preliminary title policy. Read every document in its entirety and ask questions. Now, let me set the expectation here. You and we get a lot of documents and I'm considering myself, I'm a borrower, and I'm also a real estate agent. So documents, a lot of documents. Read your documents to the best of your ability, even if you're like, Jill, I'm not going to read through all that. Please I tell my clients to get on a call with me and let's go over the most important documents. Let's do a scan to see if you have any real questions. And I try to go through those documents with them and point out the very important parts, because your documents are important and reading is crucial. Reading is necessary. It just is. This is your life. This is your investment. This is your property. This is your money that you're investing. So being willing to read and scan through and look at your documents, know what they are, know what they're talking about, know what you're getting is going to be important. And let me just say, as an agent, I can't do that for you. So your documents, I can't read all of my clients, their documents, and go through all of your documents. That is what that's for the seller to do, and that's for the buyer to do. That's your responsibility, is to read your documents. And then if you have questions, you come back. It's for me to help answer those questions. And if I can't answer the questions, or the lender can't answer the title, we will always my broker can answer the question. We always have people who can answer questions. There's never a stupid question. There's never a question that, if it's lingering in your mind, that you shouldn't just go ahead. I know, I think this may be a stupid question, it's the word is just eluding me right now. An obvious question, but I need to ask it anyway. Ask that question. You'll be glad you did later, because I'm sure if it's a question that you ask, it's a question that other people have asked too. So, do you have anything to add on that with that, Iris?
No, I think you covered it well. Thank you.
Mm-hmm. Oh, negotiate offers. It says search for properties, negotiate offers. Okay, so this is a negotiation process, the whole process of where it is, what we're looking at. So when we look at our disclosures also, we want to also look and see if there's an opportunity, especially with pest inspections and things that are home inspection. That's where we begin to, actually, I don't go through the whole process. But again, like I said, when you're working with me, I actually have videos for each portion of the process. And I go in more detail as to how I can negotiate to get your costs down in the deal, because that's what it's all about. And you want to make sure you're looking at your documents to see if there's any costs that need to go to the seller. And so I'm a buyer's agent, basically. I haven't started to work with sellers because I really like to focus in on the buyers and give that my attention. When I do too much, like what you do, Iris, my broker is also a loan broker, and he's been trying to get me to, Jill, you leaving money on the table, do loans. I say that's money well left on the table, because I can only focus on one thing. I don't need to be all things to all people. I just have to focus in and get a specialty and get my niche and be specialized in what it is I do, so that I give the focus and the attention to what it is that I'm doing, because I know if I spread it out too much. And so that's what I do for my buyers. I go and explain everything. We look at all the reports, there, see if there's any, and then we come back to the seller and see if there's anything we need to negotiate to get you more money in the deal. And that's the name of the game. Okay. So inspections, to issue, and so in that, once we get all of our inspections, we get all of our home inspections done, the pest inspection done, the roof inspection done, we get all of the inspections. And once we do that, then we do a request for repairs. And again, that's a part of the selling process. So I'm going to go ahead and read the slide. It says, for your protection, it is wise to get a home inspection. Hire a reputable home inspector. And I usually have a bundle of inspectors to give you a discount. So I work with a group already, and they'll give you a discount if you decide to go with them. And you can always go with anybody else or somebody else, but I offer that to my clients. If the home inspection turns up health and safety issues, you have the ability to issue a request for repair by asking the seller to address those issues or give you a credit for repairs at a later date. The seller can agree or deny your requests, right? So they can't agree. So it's like, Jill, you can make them. No, I can't make them. We could just negotiate and try to do what's reasonable on both sides. And so realize no home is perfect. No, I'm gonna say that again. Older homes and new homes, older homes, no home is perfect. And the inspector will find those faults. He will find those imperfections. So I always tell them, let's be reasonable. There are many types of inspections. 3 inspections most commonly conducted of the home are the roof and the pest and the home inspection itself. I usually do also the heating inspection too. So I have the HVAC people come out and also do that inspection too, to be sure that your AC, because we're in Central Valley, it's hot. We make sure that all the AC and everything is working. So in that no home is perfect, I'll just share that we've had an experience where we've had to actually cut out a space for a termite inspector to get in and to crawl under the house. And some of that inspection he was only able to do. And it turns out that there was termites in an area that the pest control person couldn't get to, and that the house needed tinting. And so, I support my clients a lot, in that, because it was unavoidable. And so, there was some hard feelings, not with me, but with the pest control people, because that was not reported at the beginning that's what needed to be done. And so we brought in another termite inspector, and they had to, for whatever reason, this person was able to get in and get under the house and get to different areas, and do that. But I supported my client through the whole deal of that, because when we had to look at the end of the day, they got the home that they wanted in the area that they wanted. And the home was exactly what they wanted, with the little house in the back for her mother. And so it was perfect. It was perfect, but it had some imperfections. And so you can get around those imperfections, or you have to ask the inspectors, how long can this wait before I actually have to make those repairs and get that stuff done. So anyway, yeah, that's the fun part. And that's the part where, we really have to be on our P's and Q's about our inspections. That I really work closely with my clients on that. Iris, you have anything you want to share?
No, I think that inspection is definitely key, and you decide what works best for you or not. But yeah, no, great information.
Absolutely. Absolutely. So market value and appraisal. So your lender may require an advance payment for the appraisal, and some confuse home inspections with the appraisal. The primary purpose of an appraisal is to establish the fair market value of a home, so that the lender knows the home is worth at least the purchase price. An appraiser does not look at the home from top to bottom. They do a general inspection only, but mainly focus on the size of the home and the purchase price of comparable homes in the area which have sold within the prior 6 months, which have sold, not which are being sold, but which are actually sold. If you receive a low appraisal, we discuss options and we ask for copies. We get copies. We don't have to ask for a copy. We get a copy of the appraisal. So is there anything that you'd like to discuss about that as far as from the lender side, Iris?
Absolutely. The appraisal is definitely for the lender, because we can't go out and look at these houses. So we hire someone. They're fee appraisers. That means they're not Union Bank employees that we employ 24/7. They're people that we have on our list of approved appraisers. And these appraisers have to have credentials. They have to be professionals. Their work has to be good. And we have to review it. So they go out and they look at the property, and they give us a report. Hey, this house compares to this house, to this house, to this house. What your house will sell for in the actual market, really, you're going to put it on the market and you're going to come up with that. But what we do when we order an appraisal is we put the appointment with Jill. And Jill she's your agent, and she is going to provide the appraiser with some properties that have sold in the area and see if those compare with what he has in mind. So she's going to be able to, say, hey, by the way, here's 4 of the properties that, have sold within the last 6 months within a mile of the area. Take a look at these. And I'm not allowed to talk to the appraiser to pressure them. Jill's not allowed to do that. Yeah. But at least that kind of information can be had. The appraisal report itself is about 20 pages, and you get a copy, the buyer, you review it. And again, we're going to look at the appraised value or the actual purchase price on the contract, whichever is the lower of the two. So if the appraisal comes in low, then maybe you renegotiate with the seller. If it comes in high, the only person I tell is you, the buyer, right? Because that's your information between the lender and me. But you are required to review the appraisal, be happy with it. And again, it's just an indication of what the market is. And I would say in the last couple of years, 99% of the appraised properties appraised came in at value. Now with the market changing a little bit, you want to make sure that when you do negotiate a purchase, that when Jill talks to you and says, hey, this house value is supported by these other houses that have sold, and you've done your homework beforehand, and you should pretty much know whether that appraisal is, that property is going to appraise that value, or if it might come in a little bit low. And that's the discussion that we have as a team between Jill, between yourself, between us. What's it look like if it does come in low? What are the chances of it coming low? What are the chances of it coming high? You know?
Right.
So,
Yes.
yeah. So that's again, it's a team effort, and that's what we look at as a lender.
Absolutely. And so what I look for as a realtor, I look in the beginning, I'm already doing that research, because we won't make an offer on a home that I haven't done research for, to see what the value is, to see what's sold in that neighborhood. And then you and I will come together and we will talk about, hey, what's going to be, what's our strategy here that we're going to. I always tell my clients, we have a strategy. Let's get our strategy together. Let's look at the homes, let's compare what's out there, and let's say, what's the reasonable offer that we want to put on the house. And sometimes we've done more than what's reasonable in order to, you have to do more than what's reasonable when it's a buyer's market to get that house. And so I just, one of my sales early this year had a market appraisal that came in low. So we had the appraisal from the property. They took it off the market because the buyer fell out of escrow. That means they decided to not go through with the deal, but all the inspections were done and the appraisal was done. And so the appraisal came in for one number, and that was almost like 90 days. And you can only, the appraisal was old, was a little past the 90 days. So they actually couldn't look at that appraisal. So we had to get another appraisal. The bank wouldn't accept that appraisal we had to get another appraisal, and it came in lower than the offer price, and it came in lower than the last appraisal. So we had to go back and we had to renegotiate with the seller. And so my clients, in this case, it was a win-win. They got that home at a lower price, and we were excited about that. They loved that home, and they got it for a lower price. They were just prepared to come to the table though with whatever they needed. But we were able to, when that appraisal came in low, we were able to still move forward with the deal and get it at a reasonable price. That's the part about the market value. So we come in and we understand, like you say, what's the high, what's the low in that area. And then we come and we decide on what our strategy is going to be. And then also, how much do you love that home? How much do you love that home? That, what are you willing to, what's going to be your skin in the game? So that comes with having money saved and being, I'm able to pay a little bit extra. I'm able to do this. I'm able to do that with my, what you put down as far as your payment and what you put down as far as your earnest money deposit. So yeah, we do that homework in the beginning. And that's one of the parts that I enjoy, is seeing what's already out there and coming back and strategizing and trying to get a win-win for my client. Okay. And so homeowners insurance, and Iris has already talked a little bit about homeowners insurance. So we ordered your homeowners insurance quote early, and you can go to your own insurance person. Sometimes previous claims by a homeowner can make it difficult to get insurance. I haven't experienced that. get replacement or get to, and then get replacement coverage. The homeowner insurance company may request a copy of the appraisal for accuracy. They usually want that, or they want the purchase agreement so that they have the information that they need to pull off for the homeowner's insurance. If you're purchasing a condo, documents may be requested by the lender, and the buyer may be requested to pay any upfront charges in the association with obtaining these documents. So although condominiums have a master policy, a walls-in policy, most likely, this is still required. And I haven't sold a lot of condos. So if you're interested in a condo, I'd love to get with you and walk you through that process, and we can have some fun figuring that out together. Okay, and you have anything to add, Iris?
Nope, just as soon as you go into contract, start shopping for that home insurance and get some quotes.
Absolutely. Thank you. Then we have lenders' conditions and the removal of the contingencies. So lenders may ask for additional information, and not may, they do. There's always additional information to give. Just, the underwriters work with a microscope. So a fine-tooth comb, there's always some additional information that's going to be needed that we probably didn't get in the beginning. They say, well, I had people, why didn't they ask me that in the beginning? Are they trying to not give me the loan? No. They want to give you the money. They want to give you the loan. It's just additional information that came up or something that they overlooked the first time, and they'll never get everything in the first go round. There's always something that the lender may have to come back and say, well, with the underwriter conditions, they didn't see this, they didn't see that. So do not make home buying mistakes such as altering your financial situation, establishing or closing credit, or changing employment while in escrow. I've actually just had a lender tell me, even if you're getting a raise. I'm like, what? And that's me. That's where I'm at. I'm getting a raise. And today I'm like, okay. So, but it won't show up for 2 weeks. So they may have to wait till I get the next pay stub for that. But that's not something that I had any thing to, that's not something that I have any control over. I also had someone else, one of my clients got a raise during the middle of a deal too. And prior to her pre-approval, she was also able, we had got her pre-approved, but then she got, her and her husband both got $1 raise each, and that increased their loan amount. So they were excited about that. But when you're in the deal, the lender will submit it for final underwriter approval. So they don't want you doing anything, especially without talking to your lender, that may affect your file having to be reviewed again. So any changes to the loan terms, such as the loan amount, rate, down payment, may cause loan delays. So be sure to review your loan disclosures and closing costs for accuracy. California purchase contracts specify the days to remove contingencies. And so let me just say that part is in the beginning. That's another one of the videos that you will get from me. We talk about contingencies and when they're removed. So we get a timeline from my transaction coordinator as to when contingency needs to be moved. That means things that have to be like you have to have your appraisal contingency removed once we've reviewed the appraisal by a certain date. We have to have the inspections contingency removed. We have to review all inspections and have all of those done and submit for any repairs within a certain date. We get that timeline from my transaction coordinator. So you won't be responsible for knowing the dates. I will, and I will walk you through where we are in each one. Then we have the lender who also is the final contingency. We have to remove contingencies so that the lender saying that you have approved the loan, you signed your disclosures, and you are actually good to go. And all of that's in the timeline. And so California purchase contracts specify days to remove the contingency. So that's what we just talked about. And I give that to my clients. Make sure your loan is firm and the appraisal is acceptable before removing your loan contingency. If you do not remove contingencies, the seller can issue a request to perform and then cancel the contract and you may be out of your earnest money deposit. So we have to be really careful. We have to be on time and on point with making sure that we are meeting these contingencies. And what I do love again about Loans Realty Elite is that I have a team. I have my own transaction coordinator. I have my own office assistant, and we are all working together to get this deal closed. And it's really my TC who takes the lead, and she makes sure that we're within the guidelines. And if not, then we do an extension. So that's really our process. We have a smooth process. I believe in having a process that's smooth, that's understandable, and clear for the clients. So that's my take on contingencies. Iris, you have anything to add about removing lender contingencies?
No, just, once a loan is approved, sometimes the conditions are really to clarify what you have. Oftentimes it's when you move money around, we want to know about large deposits. We want to know about where you came up with stuff. And yeah, if you do have a raise, we want to know what it is, how we can, in order to take that into consideration. If you have a raise and it doesn't matter, then that's okay. But yeah, the conditions are basically for us to make sure that we've dotted the I's and crossed the T's and understand your situation. Because remember, we're in this loan for 30 years or 15 years.
Right.
And it's a long time. So yes. The federal government Dodd-Frank legislation basically wants to know, has made it tough for the lenders. And now we have to know where your money's come from, where your income is coming from. And that's why you have those conditions in there. But yeah, want to make sure we get those done for you so that you can remove your contingencies and not lose your earnest money deposit. So back to you, Jill.
Yes, absolutely. All right. And so the final walkthrough. So we do not pass up doing a final walkthrough. We inspect the property to make sure it's in the same condition as when we agreed to buy it, which means when we first did our walkthrough. If you find a serious issue, we address it before we close. So again, we get it, we go in and we do our final walkthrough, make sure, things, if the things were left on the property. I had a seller, he had boards on the side, he had screens, and he had some dirt stacked. I mean, just, he had some boards. I was like, oh no, we're gonna have to get all this stuff out before we could close escrow. And then went back and did a final walkthrough, and everything had been done. And even sometimes there's repairs that need to be done. We also make sure that if the appraiser requests anything be done, we also make sure that those things are done, like smoke detectors. If there's anything that needs to be done, any repairs that need to be done through an HVAC, anything that if the appraiser comes back and says, you know what, I am not going to approve this appraisal until this, because they also have their standard. So that's from the appraiser. And especially with FHA, we are really careful about any type of, we don't do fixer-uppers with FHA. So they have to be in a condition that will be approved. And so really the appraiser has the final word on that home. When he comes out and does the appraiser, he does do they say he just does a general, but he does a general looking for specific things to make sure that the basics, things that are necessary, the water is working, the toilet flushes. He looks to be sure those basic things are there in place for you. And if not in a home, he will come back after the appraisal and let you know either everything's good to go or these things need to be repaired before I can approve. And then not only does he give you that list, and he wants to know when it's been done, and he has to come back out, and that's at an additional cost to make sure that those things have been done. So that's really the FHA taking care of you as the buyer and making sure those things are done that need to be done for the basis of you having a close. And then we come through and we do our final walkthrough. And then that's when, we decide whether we could turn over the keys or if there's anything else that we see that may be out of place, if somebody's broken into the home or anything like that. So we look for all of that. Okay. And so that's it for the final walkthrough. And then we're almost there. We're almost to the finish line when we do that final walkthrough. we're doing a happy dance at this point because you almost have are to the point to where you have keys in hand at that point. Is there anything you'd like to add, Iris?
No, just ready for closing day here.
Yeah, all right. So closing day, would you like to go ahead and take this screen on?
Yeah, absolutely. So the transaction to purchase a property is anywhere from 21 days to 60 days, whatever you guys decide. Throughout this, the lender has approved your loan. You've submitted all your documentation. We've got the appraisal. Everything's good to go. We've satisfied the conditions. Now we're in for the last steps, which are once the bank signs off on everything, and if you have any additional grants or seconds, those are all signed off. Then the bank gets a closing statement, and they send it to the title company, and they say, hey, here's our initial closing statement. And we've sent you, the seller, the buyer, an initial closing statement, which kind of gives you an idea what you're going to need to bring in. The title company then prorates everything, checks with the county to make sure that all the figures on the taxes are right, everything. And we get all the numbers and the final closing statement. We give it to you, the buyer, and we give you an itemized report. And we say, here's what it is. Okay. Let's say initially we said it was 50,000. Now, once everything is prorated, now it's 50,500. Okay. Or it's 49,000 now. So you know exactly how much you as a buyer need to wire to the title company. In the meantime, the lender, and you look at the closing statement and you go, yeah, okay, this looks right. If something's not right, we fix it, we get everything done. But now you know the number. That number, you wire the document, the funds to the title company. In the meantime, the lender is sending the paperwork, the note, the deed of trust. The note is your promise to pay the loan. The deed of trust is a public declaration to anybody who's interested in knowing who owns the property, We send all of those documents to the title company. They review it. They make sure that it's ready for the county to record. Then they send a notary. The notary calls you, the buyer, and says, okay, we have the documents ready. When are you ready to sign? 6:30 p.m. Perfect. The notary shows up. You as a buyer bring your your ID to identify who you are. You sign the documents. Okay, the notary guides you. Some of the stuff has to be notarized because some of those documents need to be recorded with the county. Nothing with your social security number is recorded with the county. What's recorded with the county is just basically saying this is the new owner and this is the lender who has a loan on it. Okay, the rest of the documents are for the lender. Once you sign those documents, the notary sends them back to us. We review them to make sure that they're fine. Actually, the notary sends it back to the title company. The title company sends them back to us. And then we review it. And then we connect with the title and escrow company. They're both in this one in the same here in Northern California. And we say, we're ready to fund. And the title company says, great, send us the funds. We send them the funds. The title company says, okay, we received the funds. We have confirmation. We're going to release this and record it with the county. Sometimes it's on the same day. Sometimes it funds one day and it records the following day. Once it records, it is legally your property. You are announcing to the world that this property is now your property. The title company, the escrow company at this point has received your funds. They've received our funds. They are now closed. Now the agents can get paid. Now the seller gets his check, her check for the proceeds of the sale. And what do you get, Jill?
You get your keys.
That's right.
Woo-hoo.
There you go. Your transaction is closed. And as I tell people,
yes,
it's not over until it's over, until you get
absolutely.
the key in your hand. And there's always stuff that may happen up until the last minute. And once it records, that is the happy dance day. And that's when you get your
Mm.
keys. So when you
Absolutely.
are planning to move, always have that moving truck. Give yourself a couple of days grace just in case something happens. Just in case the
Absolutely.
title company takes an extra day to get that confirmation, just in case the insurance people didn't get the insurance right, or the lender is having problems with the documents that were sent over and weren't done correctly. Most of the time you close on time, but as you know, as you connect with your lender, sometimes there's delays. And once we get to the
Yes.
escrow, that's a good thing. And then you can get your movers going. So always keep that in the back of your mind. Let's see how this is going, and let's see how tight I can really, schedule those movers. So that's
Right.
it. That's the closing.
Absolutely.
And
One of the delays too, Iris, may be that we have a seller rent back, where the seller needs to rent the home back from you for maybe 30. I think it's not, we shouldn't do it more than 60 days, but it's usually 30 to 60 days that they may need a rent back. Either they're moving into their new home. I had a seller rent back, and he needed the home because he was moving out of the country, and they needed to find somewhere to put his ex-wife and his daughter. And so we gave a 30-day rent back. And they came back and they actually wanted another 30. And my buyer was like, no, that's it. 30 days, that's it. It's over. We want to move into our home. And so we did a 30-day. And sometimes that chargeback, usually you can either get, negotiate the credit in the deal, or you can get that rent back to them like as a renter, and get a monthly payment from them. And I don't know, it just depends on what you negotiate. You can negotiate it for your first mortgage, to be the amount of your first mortgage, and do it that way. But it's usually negotiated in the closing, before closing, that the seller gets that credit back, that rent back. So that part is exciting. Yes. So that, and it's a lot. So be prepared to sign your life away. And when you come out, I have generally had great notaries that came out. They were very, they could even answer some questions. Now, they're not the person to answer your question. Those questions that you had concerning your loan and your docs, you're supposed to review your documents prior to signing them. You will get a copy. So that's the time you ask the lender, or me, if you have any questions regarding those documents. And then when the notary comes out, if there's any basic questions they can answer about your sign. And I had one that was really good this time. I mean, she did above and beyond. She really knew her stuff as far as, just how her paperwork flowed and what it was, and she knew her stuff. So, and it really made for a smooth transaction. So that's closing day. So that's really exciting. And that's what I'm hoping to help you work through, to get down to the end of the goal, to reach your goal for your first home, or either your second home if you're an investor. So there's one thing that is required, the homebuyer education requirement by CalHAPA. Now, this is a CalHAPA, not a FHA. This is California FHA loan that we were talking about earlier. Is that CalHAPA firmly believes that the homebuyer education and counseling is critical to the success and happiness of a homeowner, and requires homebuyer education and counseling for first-time homebuyers using a FHA program. So not all lenders, as Iris was saying, does not do the CalHAPA. But if you do a loan with me, or my broker does do the CalHAPA loan, if you do that loan, and there is a cost associated with it. So who has to take the homebuyer education and counseling course is only one of the people occupying the first-time homebuyer, first-time borrower on each loan transaction. So if it's husband and wife, either the husband is either or, not both of them have to take it. And then how do I take this course and take this education and counseling course. It's a eHome's 8-hour home buyer education, and there's a $99 fee, but sometimes we can get a credit based on, we get for a year where we don't have to, where, you know, if you need to take that education course, we get 4 free waivers a year, a month for the first 4 lenders that have to take it. And so then we try to get it waived. So I was able to get it waived for one, but not for another. And it's an online course. So there's it, and it's a 1 hour, and I've done it. And I think it's a great thing to do. You can do it either online or you can do it face-to-face through Neighbor Works America or through HUD approved housing counseling, a counseling agency. And I would help provide those approved certified housing counselors that's able to do that course. I'm actually trying to get certified. Even if I can't get certified, I'm thinking about doing the training and even actually taking the test. I just believe it is good to know. It just makes you so much more knowledgeable about the home buying process. You do not have to be in a Cal half a loan to take that. Anybody can take the home buyer education, okay, online. And so there is a link for that, and anybody can do it if you just want to be more knowledgeable of the process, the home buying process. They do financials and everything within their online course. Was great. So, and then I had somebody that came and did the one-on-one after to be sure that I had took the course and asked me questions just to verify that I understood the responsibility of being a first-time home buyer and what I was getting myself into, to be sure, because I imagine that this was most likely done after the crash, with so many people getting into home loans and not even knowing what they were getting into. So it's just a great course to have, great resource. Do you have anything to add about that, Iris?
No, just make sure it's HUD approved, and it's not just Cal HAFA. A lot of the first time buyer programs require that you have that kind of education, especially if you're buying with less than 10% down or less. Yeah.
Oh, okay, absolutely. Thank you so much. You only had only had one person that had to actually do that. So that's just some great information. It's good to do. Like I said, it's just good to have anyway. Great to do anyway. So Iris, I really want to thank you. I want to thank you for your time today. I want to thank you for all of the wonderful information and that you had to present. And then before we start, so I'm gonna here's our information that's on, if you need my or Iris's information, it's here on the screen. It's Community Loan Bank. She has her phone number. I would say send her a text. So it's iris.chavaria@unionbank.com. And I can kind of see, I apologize, it is kind of cut off on the screen. And before we go, we're also going, we're not just quite done. We're going to just take a minute. I'm going to go back to the first slide, give you a minute to go ahead and get that information, phone number and emails. And then we're going to go back to the beginning. And I am going to ask Iris to share some of her special programs that she has with Union Bank. And so just give another second here. And then we're going to go back to the beginning and just kind of say, again, this workshop was put on by the Women's Council of NARAB, the Associated Realtors Property Brokers of the East Bay. Right now, I'm Central Valley. I'm working on becoming an influencer in my area and working under the leadership of these great women with all the resources. And I did want to just share with that Pulliam Johansson is my direct mentor. I work directly under her with my leadership, getting my leadership skills, and under Tammy Willis as the president. And so if you have any questions about the NARAB Association, we're national. We also have KRAB, we're also state, and then we break all the way down to our local communities. I'm a member also of the Central Valley Realtors Board here in Central Valley. So they break down locally into their different areas. So if you are interested in being an affiliate, or you're a real estate agent and you're interested in becoming a realtist, or you just are interested in hearing more about what it is that we do and how you can be a part of it in the community, in building up the community and helping the African American community learn more about generational wealth through home ownership, then we are here for you. Okay. All right. Now, Iris, would you like to go ahead and share about your programs?
Sure. Union Bank has a responsibility to make loans throughout our community. That means high-end clients, middle clients, and then also moderate income clients. And one of the things that we realize is that those that are buying for the first time sometimes have challenges, and that maybe your money isn't all there, you're a little bit short. So we've come up with a program that is income-based. If you are purchasing a home, it's the first time you've purchased a home in the last 3 years or so, and your income is $122,000 and below, we will give you $9,000 towards closing. And that is a grant that doesn't need to be repaid. You stay in the house for 2 years and you basically get a W-2 at the end of that. In addition to that, we also work with the neighborhood housing services in Richmond. Those programs can give you up to $10,000 in a grant that you can use towards closing cost. There are other programs in the community that we work with. One of them is Lift. That one's based on income. Your maximum income today is $100,000. Might go up a little bit higher, but that's a $25,000 grant that you're looking at. There's a Black Wealth Builders, which is a $20,000 second. And some local, actually churches throughout the nation have put in money to a reparations program where it's available for home buyers. So there's different programs within the community, and that's where that pre-qualification, pre-approval session is really helpful, because not only is there FHA, not only is there CalHFA, there's also several other programs that may or may not work for you. And that's what it's about. Banks don't just have one program. We have various programs that could possibly work for you. And it's always worth a conversation to find out what it is that we can do, how I can put you together with some grants that will make a difference for you. And in some cases, extra money in your pocket without any additional cost. So that's my plug. It's there. You see my name. I'm online as well. If you Google me, you'll be able to find me that way as well. The Union Bank. So
absolutely. And so Iris, I have one now. So now I had a question. I have a couple of questions. I wanted to know, the Black Wealth Build has a second. Could you explain what that means?
Sure. So let's say you're buying a house and the house is $500,000. And you have $50,000 available to purchase the home, okay? But you don't have any money for closing cost, and you don't really quite qualify for a loan of $450,000, okay? So what this program does is, you know what? We're gonna lend you some additional money, but you don't have to make a payment so long as you own this. That's what a silent second means, is we'll give you a loan. So instead of getting a loan of $450,000, your purchase price is $500,000. Now you have a loan of $450,000. This loan can be used. So now you don't need a loan of $450,000. It's $20,000. Now you only need a loan of $430,000. There's no payment to be made on it. And that's why they call it a silent second. And it sits there until you sell the house or refinance it. At that point, you have to pay it back, okay? And that's what a silent second does, is it's additional debt, but you don't have to pay it, and it makes your first loan with the bank less, which means that you now only have to qualify for a loan of 430 instead of 450. And in some cases, that makes a huge difference. I have a school teacher right now who's buying something for 600,000. We got a bunch of grants for her in the to the tune of 64,000 plus her down payment. The silent second, which was part of that 64,000, certainly helped her qualify. Otherwise, she wouldn't have qualified. So that's what a silent second does for you, is it reduces the amount of the loan from the bank, and it's just money that is there until you sell the house. It has to be paid off.
Oh, perfect. Perfect. Thank you so much for that information. I'll be sharing that information and having people speak with you on that. Well, I had one other question. I know I had two, but I can't remember what the other one was, but I did write this one down. Myth or bust, Iris? You can negotiate your rate.
The rates, the way that the Dodd-Frank rules are, and the reform that we got back in 2008, when everything fell down, is that the government really wants to have fair lending to clients. And, just because I like Jill a lot, I'm going to give her a really good rate versus someone else. Mm-hmm. So the idea is to deliver these rates as competitively as possible to our clients. Okay. If you have a quote from Bank of America, and you actually have a quote, not, oh, they just told me this, and we're within an eighth off, send it to me. I will negotiate based on what the competition is doing. Okay. But I can't just from a fair lending standpoint say, oh, I like Jill, I'm going to give her a quarter off. Oh, I don't like Andy, therefore I'm going to charge him. I know I can make more money off Andy. That is illegal. But what I can do is I can compete for your business. What you can do as a borrower is you can say, you know what, I want a lower rate, and I can give you options on how to get that lower rate. You pay more points. Okay. Or, hey, I don't have any money to pay points. Okay, I give you just a little bit higher rate, but I always give you options on how to get your loan and what it's going to cost you. Price fixing and price changing based on an individual is illegal. But trying to do something based on competition, I'm open for it all day long. And if we have the wherewithal to accommodate that, which we'd love to, we'll go to the mat for you. And if we can't, because our pricing is, it is what it is that day, then we'll let you know that as well.
Absolutely. Well, thank you so much, Iris. It has been lovely. It has been lovely. It has been informative. I learned something every time I do a workshop. I learned something new every time. And so, again, I want to thank you for your time, taking out the time on your Saturday to do this for our clients. And I want to hope that you have a happy and wonderful rest of your Saturday. Know that you have helped our community. This video will go out to people who could not actually be on this workshop. This will get out. I will make sure it definitely gets out to my people. Wivette will get a copy of this. You will also have a copy of this workshop. And so again, I want to thank you for a great time. Thanks for spending the morning with me. And this is Jill Arrington, your Leaving a Legacy real estate agent, signing off for today. You all have a wonderful Saturday, and I look forward to speaking with you soon. Be good now. You hear?